Hi, this is Lara at Elliott Wave Gold with an extra video update for you after the session for Tuesday 30th of August has closed. I'll still be expecting some more downward movement this week, maybe a little bit of sideways movement for 2 or 3 days and then another wave down to a target about 1279. Again, if that target is wrong, it might be a little bit too low. Very short term now, if we see a new high above 1330.01, that would confirm that downwards movement is over and a third wave up would be just beginning. Let's have a look at the wave count and find out why. This is the main wave count. We had an alternate that's been invalidated with a new low below this point, so the main wave count sees all of this movement as a second wave correction at intermediate degree. Both of my wave counts see primary wave 2 over here, and this is where primary wave 3 begins. This is the main wave count because it expects that primary 3 will be longer than primary 1 because that's the most common scenario. Primary 3 will reach 1.618, the length of primary 1 at 1582. Primary 3 may only subdivide as an impulse. We have a 5-wave structure for intermediate 1 over here, and now a zigzag completing down for intermediate 2. If this target for it to end is wrong, it's going to be too low. Price may find enough support at the lower edge of the base channel around primary 1 and 2 to stop it from moving much below that point. So keep this trend line carefully drawn on daily charts. And when price gets down to it, we'll have to watch carefully how it behaves there. Intermediate 2 is subdividing nicely as a zigzag. They subdivide 5, 3, 5. Minor wave C has to be a 5-wave structure. So far we have 1, 2, 3. Now the only question today is for over here, or is it going to continue a bit further sideways? Minute wave 2 was a deep zigzag lasting 6 days, so given the guideline of alternation, we should expect minute wave 4 to last a few days and to be a very shallow flat combination or triangle. So it's most likely that it's not over here and that it's going to continue sideways for another 2 or 3 days to have a better proportion at the daily chart level with its counterpart, minute wave 2. It can't move into wave 1 price territory above 1330.01. Now here's why that's an important price point. At any stage, if we see a new high above this point, then we know it can't be a continuation of minute wave 4. We know at that stage that minute wave 4 and 5 would have to be over, and so the whole structure up to and including intermediate degree would have to be over with with a breach of this short-term invalidation point. Let's have a look at the hourly chart where minute wave 3 has ended here. This point here, minute wave 4 still is most likely to be continuing sideways. It's most likely to be a combination flat or triangle. Within a flat, you can have a B wave that moves beyond the start of the A wave, and that's actually very common because the most common type of flat is an expanded flat. Within a triangle, 40% of triangles have B waves that move beyond the start of A waves, as in running triangles. Within combinations, there's no maximum limit for an X wave, and they too may make new price extremes beyond the start of the first structure in the double labelled minuet wave W. So for all three groups of structures that minute wave 4 is most likely to be, this new low most certainly fits and makes sense. It's actually quite likely. The only thing that's a little bit odd about it is the depth of this downward wave in relation to this. There's a common length for a B wave within a flat of between 1 to 1.38 the length of the A wave. This one is a 1.76 length of the A wave. Now that's longer than the common length, but there's no rule stating a maximum limit for a B wave. There's only an Elliott wave convention which states that when your B wave is over twice the length of your A wave, the idea of a flat unfolding should be discarded based upon an exceptionally low probability. That price point would be any move below 1305.95. If minute wave 4 is not over and is continuing further sideways, then minuet wave B or X within it really should be over here. We should be seeing overall upward movement. Now, there are still 3 structural groups that minute wave 4 can be, and at this early stage it is absolutely impossible for me to tell you with any certainty which one of those groups of structures it's going to unfold as. I can only tell you what it's most likely to be. It's most likely to be an expanded flat correction, and the second most likely structure would be a running triangle. The third most likely structure would be a combination. An expanded flat subdivides 3, 3, 5, and the C wave is extremely likely for a flat to make a new high at least slightly above the A wave so that it avoids a truncation. If I calculate a target for C based on 2.618, the length of A, that takes us just above the invalidation point though. So for an expanded flat, I'd only be expecting C to move a little bit beyond the end of A in order for minute wave 4 to complete as a flat and for minuet wave C to avoid a truncation and a very rare running flat. The other possible next likely structure is a running triangle. All of the subwaves of a triangle must subdivide as 3s. One of the 5 subwaves is likely to be a more complicated and time-consuming double zigzag structure. So we would have a zigzag for A, a zigzag for B, we'd need a zigzag for C for a triangle, which cannot move beyond the end of A, it must fall short of this point, and then a zigzag down for D, which can't move beyond the end of B, and a final zigzag up for E, which can't move beyond the end of C. So a triangle would be overall choppy, sideways movement, probably for another 3 days, in an ever-decreasing range to complete a running, contracting triangle. The Elliott wave rules for the ends of each triangle subwave are very clear. They can't move beyond the end of the prior wave in the same direction, with the exception of D of a barrier triangle. But if it looks like we're seeing a triangle unfolding, I'll get into those complicated rules for you. For now, just understand that it's entirely likely we could see price meander sideways in an ever-decreasing range for another maybe 3 days to complete a little triangle for minute wave 4. That would give it perfect alternation with the deep zigzag of minute wave 2. Now the third group of structures is a double combination, and these are actually pretty common structures. The first structure in the double would be a zigzag labelled minuet W. The double would be joined now by a complete 3 in the opposite direction, a zigzag labelled minuet wave X, and now we'd be expecting either a flat correction or a triangle to complete the whole structure sideways for minuet wave Y. The purpose of combinations is the same as triangles, to take up time and move price sideways. To achieve that purpose, the second structure in the double usually ends about the same level as the first. So for a double combination, would be expecting a flat or a triangle for minuet Y to end about the same level as minuet wave A. The whole structure for minute wave 4 may not move into minute wave 1 price territory above 1330.01. Minute wave 4 can touch the end of minute wave 1. Its only movement above this point by any fraction at any time frame, which would invalidate this wave count. When minute wave 4 is over, then I will use the ratios but at minute degree to recalculate this target for intermediate 2 to end. At that stage it may widen to a small zone or it may change. It'll probably move upward. This is an alternate because it has a couple of problems. If minute wave 4 is over here, it's very brief. It would have lasted only 1 day compared to minute wave 2 lasting 6 days. Now that's possible, and sometimes fourth waves are more brief and shallow than their counterparts second waves, and that happens for gold before a very strong fifth wave. But that tendency to swift strong fifth waves and shallow brief fourth waves for gold most often turns up in gold's third waves, not gold's C waves very often. And so although that is a common tendency, I don't think we should be looking out for it in this case, because this is a C wave, not a third wave down for this wave count, if I've got the wave count right for the bigger picture, that is. The other problem with seeing minute wave 4 over here is a lack of alternation. Minute wave 2 was a deep zigzag lasting 6 days. If minute 4 is over here, it's a very shallow zigzag lasting 1 day. They are both the same structure. They would both be zigzags. That lack of alternation also reduces the probability of this wave count. But if we see a new low below 1305.95, then this wave count would make sense. Now here's the other problem with it. It's possible now to label the whole thing over here. We could see intermediate wave 2, the whole thing could be over at today's low. I would only want to consider that if the main wave count is invalidated, though, above 1330.01. We will have that firm price point to tell us that intermediate wave 2 is over. For now, let's expect it's most likely minute 4 is going to move sideways, and then we'll have a final fifth wave down. At the daily chart level, this is an alternate wave count. I've moved the degree of labelling within this impulse all up one. It is possible that primary wave 3 was over and this sideways correction is primary wave 4. This is an alternate though because it sees primary wave 3 having slightly weaker momentum but stronger volume, but importantly being slightly shorter in length than primary wave 1. That's entirely possible, but it's more normal, more common for third waves to be longer than first waves, but we need to consider all possibilities. If this is primary wave 4, the structure at the hourly chart level is exactly the same. We'd have a main and an alternate at the hourly chart level in exactly the same way. The only difference is the degree of labelling would be all 1 degree higher. Primary 4 can't move into primary 1 price territory below 1282.68. I'm not going to go over the weekly chart classic technical analysis. I covered that in yesterday's video. Let's jump straight into the daily chart. Yesterday we had this small green body and a long lower wick that was bullish, but it was coming on lighter volume, telling us that it was probably more likely a counter trend movement than the start of a sustained upwards movement. Now we've got a strong red candlestick. Very importantly, it comes also on slightly weaker volume. Overall, as price is moving lower, it's coming now with some decline in volume. That tells us that we've probably got the end in sight, coming quite closely. Now it could also fit, if this is a B wave down coming on lighter volume, absolutely would make sense. And so this slight decline in volume for a good strong downward day actually slightly supports the main hourly Elliott wave count over the alternate. I've taken a little bit of time today to look back left on the chart and have a look at prior levels of resistance and support. I've gone back to May 2015, but I've also looked more carefully at these recent movements. We've got resistance here about 1305, support here just below 1310, here at 1310 and here at 1310. I'm expecting this area at 1310 and 1305, when price gets down there, is going to offer some pretty strong support. That's the lower edge of this consolidation zone. Gold ended this upward swing on this day and moved into a consolidation on this day. During this time that gold has been consolidating, it's been swinging from resistance to support and back again. And during this time, it is this day here, I think this is the 7th of July, and this day here in August, which have strongest volume. This trick usually works well for gold. It tells us that gold is most likely to break out of this consolidation upwards, and that's what the Elliott wave counts expect, and that's supported by volume. I won't be expecting this downward swing to end until price reaches down into support and stochastics is oversold at the same time. Stochastics is in oversold, but price isn't quite at support. But here's another little indication of weakness. There's small day-to-day divergence now between price and stochastics. Stochastics has a slightly higher low, and today price has a slightly lower low. That tells us that there's some weakness to this downward movement, and if this is a B wave, that absolutely makes sense. That slight divergence also supports the main hourly Elliott wave count over the alternate. Today, on balance, volume has moved down and away from this purple trend line offering resistance. The strength of that line is slightly greater now. I'd expect some support if it gets down to the yellow line, but this line's been weakened by a breach and return more recently. RSI is not exhibiting any divergence to show weakness. It's not extreme. There's room for price to fall yet. ADX is still declining, telling us the market is not trending. The positive and negative DX lines are whipsawing about each other. ATR agrees with ADX. It tells us the market is consolidating, not trending. Bollinger Bands starting to disagree for 4 days in a row now. There's some widening, but they are still relatively tightly contracted. After this period of contraction, we should expect a trend will return, ATR will start to increase, ADX should tell us what direction the trend is, and Bollinger Bands should show us that volatility is returning to this market. At this stage, we don't have a lot of volatility and price is just range bound. So short term, the Elliott wave count expects some sideways movement for a consolidation, totally entirely possible. And mid-term, this approach, a range bound market approach, expects a bit more downward movement to support at least to 1310, if not to 1305, and the Elliott wave count's going to expect pretty much the same as well. That's all for me at the end of the day for your extra video update, and I hope that all of our members are having a fabulous week.